Right, folks, a very warm welcome. It's Sunday, 7 o'clock sharp in the evenings, and 12th of December 2021. And I'm here to discuss with you all the market outlook for 13th of December 2021, which is Monday. This week is very important for all of you. If you're new to the channel, welcome. But this week is very, very important because you have the FOMC, the Federal Open Market Committee, meeting to decide the stance on tapering and also meeting to decide whether they will move to a three rate hike cycle in the next year. So I want to discuss a lot of things today. I want to discuss the macro view going forward because we are at a very pressing matter of inflation in America and whether or not it will trickle down to India and the emerging markets. And I'm also here to discuss the technical view on the chart that is going forward. And we'll talk about the dollar and how things are, in fact, before the FOMC, which is on December 15th. So I have some interesting articles here right now on my screen. I'll start off with them, give you my understanding, give you my view, and then we go to technical charts. So welcome, sit back, enjoy the next 20 minutes of market commentary. So I'll start with the Economic Times and what is planned for the next week. And they start off with a commentary on updates on the global COVID situation will remain on everyone's radar. So I'm here to tell you this very simple fact. Markets don't fall for the same reason twice. If COVID has happened in 2020, if the markets want to fall this year, it's not going to be COVID, especially not the new variant that's been out there haunting the lives of people. Let me put it very clear. All the big authorities on pharma, whether it's WHO or whether it's anyone, everyone has already commented that it is too early to call the shots on the new variant. It is too early for us to call the shots on the new variant, whether or not it is deadly, whether or not what are the symptoms like, whether or not the vaccinations are enough to cope with the same. So it's too early. So until we give it 1-2 months time, you're never going to come to a conclusion. So keep on dreaming. I personally don't feel the markets will fall down because of COVID. That is my personal view. But obviously, if you have some rapid rise in the cases going forward, that is one only reason. But currently, we have very few cases in India, in a particular handful states like Maharashtra, some in Delhi, some in Karnataka. But otherwise, things look okay. So all the vaccination companies, all the pharma companies have already stated it's too soon to call the shots, and they're already putting a lot of efforts on research and development. So we'll wait for their signal of how things are. Yes, as I said, the US FOMC is something which is the most important event this week. And the central bank is expected to, by all the brokers, by all the investment banks, to increase, to accelerate the pace of tapering, which was $15 billion of bonds, and which is now going to expect it to go to $30 billion per month. So this is also in anticipation of the inflation coming in at 6.8%, which is nothing but a 40-year high in America. But otherwise, other than that, you have the Indian CPI numbers expected to be out tomorrow. So what the expectations of the street are 5.1% on the CPI front, but it's going to be a non-event. If you ask my personal opinion, it's going to be a non-event. We have the Rbi Norms. RBI is okay for the inflation to be between 2 to 6%. So if the inflation is in this range, it's nothing to worry about. So any inflation that comes up at 5.1% tomorrow, though above the last month readings, it's going to be a non-event because already forecasted. But anything below that, below 4.07, could be a good surprise, good positive surprise for the markets because no one is expecting that. So I want you all to keep in mind. As I said, I'm not really concerned about the Omicron variant right now. And I said, if you markets don't give you the same fall twice for the same reason, I'm here to say one very simple thing. It's about conviction and these things. Guys, try to understand. We've got a good 10% dip in the market. I got you into that bank Nifty bottom at the 200 moving average a couple of days back. I'm here to give you a very simple idea. Please understand, it's about conviction at these levels. Whenever people are greedy, it's time for us to be fearful. But when everyone is fearful around you, it's time for you all to get greedy. I'm here to tell you something. Most people are not successful in life because they would sacrifice what they want most for what they want now. So what do you want right now? Do you want a short-term gain? Do you want a short-term volatility? Or do you want long-term future? You want long-term growth? Because if you want long-term growth for yourself, for your son, for your kids, for your grandkids, for your great-grandkids, if the market dips, I want you to buy. You might not remember this video for a very long time, but I don't care about that. I want you all to buy 17,000 levels, 17,200 levels. They're massive support, 16,800 levels, which looks now very, very difficult to achieve. But if the markets for some reason ahead of the volatility gives you a dip, please allocate 25% of the idle cash that you're sitting on, that you're waiting for investing in the markets. You will thank me later. Period. Going to the Korean Times, I want to read about that. I want to read about different writings in different countries so that we get a good view of what is something we can expect. The Korean Times have said something like this. The benchmark Kospi is expected to widen the level of fluctuation throughout this week as the US Fed is likely to have a stronger market signal for faster tapering, what we've expected. The Fed Chairman Powell has turned hawkish last month. Hawkish basically means when more importance is being given to inflation as compared to growth, and expecting inflation to be transitory. So, amid the inflationary fears in America, a lot of us, everyone in America, is expecting the Fed would double the speed of its tapering, and that the bond buying now would be ending in next March 2022. And also, Wall Street analysts are expecting the Fed from a two-time rate hike to go to a three-time rate hike in 2022. The reason for that is because they're speeding up the pace of tapering. That is what the Korean Times have to say. Just go read the articles. Very good, very well written articles. And how everyone is expecting more volatility coming in this week. You can see the CNBC doing the same. But what I'm really concerned about, what beautiful message I'm really concerned about is the ING, what they have, what the Dutch multinational bank has to say about the Fed meeting. I want you all to just be with me for a couple of minutes. I know no one really cares about macro because you all trade intraday, but it's really important that you get a peace of mind on what's about to happen. Have a techno funda approach. Don't just be on the charts and start your analysis with Nifty. That's the poorest way of going about things. Have a macro view, have an overall view, and come from a top-down approach. And that is what technical analysis is essentially about. Because until you don't know where Nifty is heading, you can't make a view on the intraday, you can't make a view on the stock. So you have to understand what could be the announcements and what will the impact be of those announcements on our benchmark indices. Because India, being one of the major emerging economies which see most of the inflows by the FIIs, it will come under pressure if these things start to play out. Currently, if you have been observing, the FIIs from selling 4,000 crores, 5,000 crores every single day have reduced their selling to 1,000 crores, 2,000 crores approximately. And one of the reasons for that is that before the Christmas, they would start to take their leaves. They would start to take the global holiday season will start, I would say, from the 20th of December till the 8th of January, till the TCS INFI results come out. That's when the markets become very mildly volatile, and it's a God's signal for all of you also to avoid markets and just come towards enjoying with family and friends. But the one reason could be that they've already sold a big chunk in the last 1.5 months, and during the holiday season they are reducing. But this is what is very important. Quantitative easing, the end is very near. Nigh means near, or it's almost there. Quantitative easing basically means the Fed's I would say the efforts of Feds, the monetary policy of the Fed to buy the bonds and giving liquidity, giving stimulus. The November 3rd FOMC, it saw the Fed call time on its 120 billion per month bond buying quantitative easing program. So what's happening was that the Fed every month is buying 120 billion of bonds. If they're buying bonds, they're giving you liquidity. That's the liquidity driven rally that we've seen in the last 1.5 years when COVID happened. It announced that the asset purchases would reduce by 15 billion in the November FOMC. FOMC in November, they said that now going forward, they're not going to buy 120 billion of bonds per month, but now they will be buying 105 billion of bonds per month. They're reducing that. That's called tapering. The Fed's effort of reducing the bond purchases is called tapering. So from 120 billion to 105 billion from November, so that the quantitative easing program ends in the middle of 2022. That was their initial stance. And this is the time when the stagflation concept occurred and the inflation was high. But going forward, what is the expectation? And they said that a further 15 billion in December going forward, which means that the quantitative easing program would end by May 22. So what their initial stance was that from November, they'll be doing a 105 billion of bond purchases, and from December, they would go towards a 90 billion. So tapering by 30 billion. However, they also said that they could adjust the speed. So the speed that they're doing tapering with, reducing the asset purchases, if warranted in the new year 2022, if warranted by the changes in the economic outlook. So what if COVID becomes serious? What if COVID, so the new variant is quite has a big threat to the markets? Because if that happens, they will have to reduce the speed, or they would have to stop the tapering and again give the American market stimulus, because jobless claims will be high, the non-farm payrolls will go down. That's what they say. They could change the outlook depending on the economic outlook. If that is the case with the household, blah, blah, blah. But Jerome Powell has signaled that he also is looking for policy normalization, because already the CPI is moving toward a 7% mark. What he's trying to say is, if you observed on Friday, the CPI in America, the consumer inflation in America, came at 6.8%, which is nothing but the 40-year high. So when the inflation is so high, the economy is not growing, the jobs are coming down, unemployment is increasing. That's called stagflation. So amid all these concerns, American markets are expecting to into more swiftly, or in other words, what Powell said, that I don't think inflation is transitory. It's not temporary. It is something that we have to focus on now. And at the same time, one thing which was out there was that there was no opposition by the Fed officials. None of them had a different view. So going forward, what they said is, what the expectation this week is, that the Fed is going to announce acceleration in the quantitative easing tapering, which is a further 30 billion reduction for January. So this will mean a 60 billion reduction of purchases that have been done. अभी तक क्या हो रहा था? 120 billion of bond buying every month. In November, they said we'll do 105 billion. In December, they said 90 billion. Now further 30 billion for January. But now they will only do 60 billion from 120 billion. And if this is the piece, and a further 30 billion in February, if this is the pace going forward, this will mean what? That the quantitative easing program would be ending by March. पहले क्या था? Now try to understand what's going on. पहले they were expecting that the quantitative easing would end by middle of 22, which was May end. Now with the pace that it is expected by the Fed, this would end by March. So if this program was ending by May, they only had room for 2 rate hikes. And now if it is ending by March, they have room for 3 rate hikes. That is what they are calling the shots on. Transitory inflation, jo tha, temporary view, is something that you have to change. You have to consider as important. That's why we are turning from dovish to hawkish. And that's what they're saying. So rates rising faster because of earlier than expected. Now they are moving towards 3 rate hike calls are looking very, very likely. So that will have a very big impact on the dollar. If you observe, the euro US dollar has been moving in the range of 1.1 and 1.4. Now, if the Fed starts to increase tapering, if the Fed starts to call for a 3 rate hike in this meeting, which will be announced by Wednesday in the evening, 12 to 12:30, it is likely, or the market participants are expecting, that the euro USD would break below 1.1. That is the expectation going forward on the charts, or what people are expecting. At the same time, after Wednesday, Thursday, you would see the European Central Bank giving their own comments on the tapering, or what Fed has said. So now the next couple of days are very, very important for anyone who's trading in dollar in the forex markets, or any sectors in the equity market that depend upon dollar. For example, metals. All these sectors will have a very big impact depending upon what the stance is, especially because dollar is expected to get stronger. And if the dollar gets stronger, you will see further outflows coming in from the Indian markets. So just understand this. Expected that euro dollar, if the news comes out, what we are expecting, it's expected that 1.1 will try to break in the euro US dollar. Now that's some views that I wanted to inculcate, imbibe you all with. I hope things have made quite some sense. So it's expected that dollar will start to go higher from now. It's already trading in a very tight range itself. So dollar is expected to go further higher. And if dollar starts to go higher, if the Fed starts to increase the tapering, this will also have an impact on the bond yields, which can get your IT sector back into pressure, which had already started. So all these dollar-specific industries, sectors, assets, they will be commodities, will be under focus. So volatility will be there this week, and the market will be deciding their fresh stance of where they are heading going forward after Thursday. The 3 days will be volatile. They will be choppy. You will see some wild movements in this market, up and down, both of these sides, because some people are buying, some people are selling. But just keep this in mind. That was the macro view for the first 15 minutes that I wanted to discuss. Now, going to the charts of Nifty, We didn't. If you look at the SGX, you can see that the markets haven't really respected what happened in the inflation. You saw 6.8% numbers, highest in 40 years, but market didn't fall down. I gave you a commentary on Telegram, and if you aren't on Telegram on my channel, I'll put a link in the description. And what did I say? I said iPhone is expensive. iPhone 13 Pro, expensive will remain expensive, and cheap will remain cheap. If you want to buy an iPhone 13 Pro, you don't care what the salary is, what a salary, but you'll still buy. It's more of an inelastic demand now. It's very poor of me to say that, but it has become an inelastic demand. If your iPhone breaks, you're not going to go buy an MI. No matter what, you'll try to save up and buy an iPhone 13 Pro, even though it's 1.5 lakhs. So expensive will always remain expensive. Remember these words because I'll tell you why in the next couple of minutes. Number two is markets react to surprises. Right now, there is no surprise of the inflation coming to a 40-year high. Everyone already knew that. That is why when the numbers came out, it was all okay. It was all okay, and you can see the Nasdaq 1.5% higher, and the American markets mostly 1% higher. The Asian futures were doing fine, and the Indian futures were doing fine as well. So it is expected that the markets, even tomorrow in India, considering all things remain equal, should be opening at a gap up, as what the SGX Nifty suggests. But you never know what the SGX Nifty has in mind. So let us look at the Asian futures and plan. Always remember when the markets are coming off a holiday, you can't give the entire commentary, but I will try to give you some commentary. And please be online on my Telegram channel. Put on the notifications on my YouTube and on Telegram, because a lot of times amid this volatility, change in stance is required and some new updates are important. So make sure you get them in time, because no one can predict what the exact every single tick of the market will be doing. If you look at the 1 hourly charts of Nifty, or let me start with 1 day charts, I already made it a point to make you all understand how important 17,500 is. A couple of things originating here. Number one, this was the previous rally high. Number two, this was nothing but the 50 exponential moving average. And number three, it was nothing but the 50% retracement mark from the recent fall of 18,200. So that's why you can see that the last 3 days actually, markets have tried to halt at the level of 17,500. But if you start to look at the 1 hourly chart, before I come to the more precise chart, one thing that you have to keep in mind is that markets have not moved above 17,600 for a long period of time. If you remember a couple of weeks back or a couple of days back in November, late November, this was the time when you were trying to go long. When this would break, you would get a W on the chart and then you will go long. And currently, this is one level which is very, very crucial for all the bulls in the market. I'm again trying to repeat something. Currently, markets are staying at higher levels. Expensive remains expensive, cheap remains cheap. You always have to make up a mind कि यार, do I go long, do I go short? और अगर market ऊपर घूम रहा है, it doesn't mean just because it's expensive go short. Let the market come to lower levels, then decide to go short. But just don't go short for the sake of going short at higher levels. Don't become such a player. Is all my advice is. So if I go to a 1 hour chart, so 17,600 levels in this week is a very important week. The more time you spend towards it, the more time you spend above it, the stronger the markets get. And that would also mean that your supports from 16,800, 17, 17.2, they keep on shifting up and up and up and up. Just remember this point. The more time you spend towards 17.6, the more you consolidate near 17.600, and the more you trade above that, that would mean जो earlier support यहाँ पे था, it would shift to 17, that would hit 17,200, तो ऊपर जाता रहेगा. That would pave the way for fresh or further highs. Just keep this point in mind. Same is the case for Bank Nifty. Now coming to a 1 hour chart, you can, markets follow very simple rule. Markets will expand first, then they will contract, and then they will again expand. That's how the markets move. If you look at the Bollinger Bands, which is a very good tool of measuring volatility, and if you can open the Bollinger Band bandwidth, you can see something very, very clear. Look at the Bollinger Band, the level of 7,600. Markets have for 3 days sustained or stayed in this very, very tight range of 17,600, between 17,380 and 17,550. A good 150-200 point ka range. So the more market has spent, if you observe the Bollinger Band charts, यहाँ पे you can see how wide it was, showing that markets are giving you volatile swings. Now, when the Bollinger Band starts to get very thin, when it starts to become very small, when it squeezes, you can also see from the Bollinger Band bandwidth that the markets are trading. The bandwidth basically measures how narrow or how wide the Bollinger Bands are, or how narrow the volatility, how more the volatility. If you're observing, यहाँ volatility was massive, ये बहुत बड़ा था. यहाँ volatility is very, very small. So what we have to see is that Bollinger Band has become very, very narrow, which means that a move could emerge going forward. So same is the case even for Bank Nifty. If you open the charts of Bank Nifty, you can clearly observe that the Bollinger Band, whenever Bollinger Band is coming, the bandwidth comes to these levels of about 0.01, you can see that the markets start to give you some kind of move, because that is how much the markets want to contract for. And after, again, expansion will start. A market already, you can see it's becoming thin. That is just one point that you have to observe for tomorrow. Because the markets have halted for 3 days, or 3 days, a new move can start to emerge. That I want you to be able to catch it. Secondly, if you open the daily chart of Nifty, Bank Nifty, anything, you can observe that right now markets are moving in a very, very tight range. 17,540 is the high, 50 is the high, and low is 17,380. So जब तक ये maintained है, आपने short भी नहीं करना, long भी नहीं करना. Let us say the markets break 17,540, 50 levels, then there is no point to go short also. Short आपने तभी सोचना है when the market goes below these areas, or 17,380. 17,340 levels, 50 levels. If the market is staying above these levels, then please eliminate the word short right now. Scalps will come, but we will only think to go short if the market goes below this doji. Otherwise, when the market breaks 17,540, 50 levels, I would like you all to go long 30-40 point SL and just try to play the move. If you look at the charts of Bank Nifty, very, very similar scenarios. Bank Nifty is currently, I very clearly discussed about this, that we will not go short unless until markets are opening below this. If you observe the charts right now, let me hide every tool right now so that you get a clearer view of the markets. You can see very well that markets have come down last evening, retested, and they're again going back up. So short कब करना है? Short हम तब करेंगे for, if let us say for some reason markets open only gap down. That could be more of an island kind of a reversal. But otherwise, if that only doesn't happen, if it doesn't open below 36,600 levels, मैंने आपको एक level बोला था. If you all remember, let me know in the comments. I said 36,580. जब तक इसके ऊपर हो तो ऊपर रहो, शॉर्ट सोचो ही मत. जब तक आप 580 के ऊपर हो तो ऊपर खेलो, शॉर्ट मत करो. डिप आएगा तो बाय करो, वो भूलना मत. I don't want you all to think about shorts as long as you're trading at least above 750. The lows that have been, the highs that have been made here over here. अगर इसके नीचे आएंगे, प्राइस एक्शन बनाएंगे, तभी शॉर्ट करेंगे. But currently all the Bollinger Band especially is trying to show you that in 1 or 2 days, by tomorrow or by day after, an expansion would play out on the charts. So once the markets start to go above the highs of today, you can again start to go along with the 40-50 point stop loss. If you look at the 15-minute chart, Nifty पे तो काफी clear है. थोड़ा सा Bank Nifty did become weak. If you look at the Bank Nifty price action on the intraday chart also, it never ever broke this retest zone, and of this descending kind of a triangle is broken out. Right now, there is no reason for us to go short. So I would say we have a resistance right now around 200 ka level approximately. You can see over here. यहाँ पे some kind of a resistance over there. So if the market starts to come here and go above that, you can always go long. Because even Nifty is signaling something like that. It's been trading here for quite some time. So if the market is opening and crossing 17,600, I would like to go long. Or if it crosses 17,550, अगर ये high भी टूटता है market, I will go long. First target 600, उसके ऊपर जाएगा, I will trail. So I want you all to remember these points because they are very, very important. And yes, the volatility will remain. The most important question is, do you go long or do you go short? And I don't want you all, if you don't want to go long, that's on you. But I don't want you to go short unless until market goes below 380. Uske niche aayega, then we will think. Same thing for Bank Nifty. I don't want you to go short unless until you go below 750 or even 580 because they are massive supports right now. So if the market is coming down to down levels, I want you to be a buyer on dip right now. But I don't want to look for short opportunities. That's my view going forward, and the rest you will see on Telegram. Hope you had a good time. Let me know in the comments. Please subscribe, share, like, and see you tomorrow. Cheers.